All right. What's up, traders? Super excited for today's video. We're going to break down the Fibonacci formula. We're going to dive into the brief history of it, all right, where it's from, who invented it, who made it famous, and then we'll go into why it's so important, why you see it across nature in the stock market and cryptocurrency markets, and then we'll explain how you can use it to possibly improve your trading. And instead of drawing, levels with the naked eye, you can start using the Fibonacci formula to give you numbers that the stock or the cryptocurrency is going to naturally be attracted to. Okay. Because believe it or not, most trading is done by algorithms these days. All right. When you're speaking of hedge funds with billions of dollars, hundreds of millions of dollars going into a trade, and bots and things like that, it's all done with algorithms. And, once you start to understand that and you're able to use some of the process and think like an algo, it will really help improve you and you'll start to see some, better results and hopefully start to improve your overall profits and losses. All right. So we're looking here on Wikipedia, right? It's named after Fibonacci, Leonardo Bonacci, Leonardo of Pizza, or Leonardo Bigolo Pisano. All right. He's commonly called Fibonacci, and he popularized the Indo-Arabic numeral system in the Western world. Right, he introduced Europe to the sequence of the Fibonacci numbers, and so he didn't invent it, but he basically popularized it and made it what it is today, which is why it's named after him. All right, so in math, the Fibonacci numbers, all right, they form a sequence known as the Fibonacci sequence, in which each number is the sum of the two preceding ones, right? So if you look here, 0 and 1, 0 plus 1 equals 1, right? 1 plus 1 equals 2, 2 plus 1 equals 3, 3 plus 2 equals 5, and so on and so forth. It was first described in Indian mathematics, and that's really where all of it started to develop and take place. There were some really, really great minds back in the day over there, and he really just popularized it. And we all know how Europe kind of conquered and took over the world, kind of rewrote history books. So they're the ones who get the most popular claims to these things, and that's kind of why it's named after him. But we'll go ahead to Investopedia now, and we'll look, and it says, what are Fibonacci retracement levels? All right. Fibonacci retracement levels stem from the Fibonacci sequence, and they're lines that indicate where support and resistance are likely to occur. Now, it's never 100% guaranteed, but it is very likely. All right. If we scroll down a little bit more, we can take a look at some of the key points, right? And some of the key points that we want to highlight is that the Fibonacci retracement connects any 2 points that the trader views as relevant, typically a high point and a low point. So I'm going to go into the charts later on in the end of the video, and I'm going to be using the term swing high and swing low, and that's what I mean, okay? So you're going to be connecting a high point and a low point. The most commonly used ratios include 23.6, 38.2, 50%, 61.8, and 78.6. These levels should not be relied on exclusively. So it is dangerous to assume that the price will reverse after hitting a specific Fibonacci level. Now, the most important Fibonacci level is actually going to be the golden ratio. All right. And there's a unique ratio to describe the proportions of everything from nature's smallest building blocks, such as atoms, to the most advanced patterns in the universe. All right. Like unimaginable large celestial bodies. We're actually going to break that down too. I'm going to give you guys examples of how the Fibonacci sequence and, the fibs exist all throughout nature. When you hear me saying that in my videos, that it's very relevant, and that you see the fib exists in the stock market, cryptocurrency market, and in nature, we'll go into those examples. But first, we want to highlight the golden ratio. Okay, it's an irrational number, all right, that basically approximately gets you to 1.618. So 618 is really kind of like the golden pocket, right? Some people call it the golden ratio, the golden pocket. And this is really where people like to make a lot of their moves and decisions. They want to wait for the retracement to the 61.8 or look for an extension to the 161.8, right? Now, the way you can use the Fibonacci, there's a couple different ways, right? There's Fibonacci retracements, which is pretty much 99% of what everybody uses, but there are a couple other strategies you could use, such as the Fibonacci arcs, right? The Fibonacci arcs, what they're going to do, all right, you connect your low and your high, and you basically look for support or resistance along the arc levels, right? So you see, we end up finding support at this bottom one. We come up, consolidate, and then boom, we hit resistance right at our arc. You see, it's a nice resistance right around there. And that's how people would use the Fibonacci arcs. There's also the Fibonacci fans. And you can use these in a pretty similar way. And it's just going to give you some trend lines, okay, to look for support and resistance. So you connect your low to your high, all right, and you come through here and you start to see that what once was resistance turned into support and then turned into resistance again. We look here, support, 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 resistance, right? So that's where, how people are going to use these. You can also use the Fibonacci time zones, and that's going to give you some vertical lines on your chart. All right, and it's basically going to give you, these lines right here. All right, these are going to be your Fibonacci time zones. And like I said, most people don't use all of these. They really just use the Fibonacci retracement. But before we dive into that, we'll go over this article from Mathnasium, just showing you some nice examples of where the Fibonacci exists throughout nature, and they talk about the golden ratio. So the first example is going to be flower petals and seed heads, right? If you come in here and look, all right, this is your Fibonacci formula over here, all right, and then this is the configuration of the seed heads and flower petals. They align well with the with the formula. All right, you can look at pine cones, also do the same thing, even tree branches, right? So we talked about how it's adding the sum of the number before, right? So we have one branch down here, right? We come up here and now we have two branches. We have one here, one here. If we add this 1 and 2, we're going to get 3. Well, look what we got: one branch, two branch, three branch. And we come up here, add 3 to 5, you get 8, and you have 1, 2, 3, 4, 5, 6, 7, 8, and you add 5 and 8, you get 13. So all across nature. All right, even seashells. Seashells are one of people's favorite things to talk about, but you can see that it's following the structure of the Fibonacci's very well. You look at spiral galaxies. All right, it's going to have this same pattern right here. Even hurricanes. Okay, hurricanes. You have the eye of the storm, and we're coming around and making the fib formula. All right, so now that we've went over that, we're going to actually take a look at the charts here now. We're on TradingView, and I have a cryptocurrency pulled up known as Casper, okay, ticker symbol CSPR. And what we're going to do to find price targets to the upside and where there's possible resistance is going to take your swing highs to your swing lows using the Fibonacci tool on TradingView right here. So once you do that and you break above your one, the levels that I watch is going to be the 1272, the 1414, and then that 1618, that golden ratio that we talked about. Now I want you to look and see, once we broke past there, where did we come up and hit? We hit the 1618. And if you can see, that was a very strong resistance level. All right. We weren't able to get above this level up until here recently, and we're climbing higher, possibly could reach the 2618 if this bullishness continues. But taking a look, look at where it found support at, right? It found support at the 1272. So when we came up and hit that target, all right, this was a valid support level. So this is what it means, when we were saying it's going to give you support and resistance levels. All right, so that's the most recent example. We'll go over Casper. All right. And we'll be able to use this to get price targets up to the upside and the downside. All right. Now, one thing I want to highlight is that we've done a pretty good job of the 786. All right. The 786 has been a pretty valid number when you're looking for support to the downside. So we just went over using your swing high to your swing low. What we're doing here is connecting the swing low to the swing high. All right. And that's going to give you support levels to the downside. So what we see is that when we broke the golden ratio here at 0.618, right? We came down, but we didn't get down all the way to the 786, right? And once we come to that 786 level and get close to it, we tend to wick back up, right? And we ended up holding the 0.618 as a valid support level until ultimately we came back down, and look at where we found support was that 786, right? And it's been very, very bearish in crypto right now. So it's nice to have a level where you can try to look for some support before looking for support all the way up here, all the way up here. We've done a pretty good job of holding the 0.618 or holding 0.786. Now let's go ahead and use it again, connecting our swing low over here to our swing high up here. And this is going to be an example of once you break through this key support level here, it's going to give you valid support levels to the downside and price targets where you can see the price action drawn towards. All right, so we come here to the 1414 and look at where we ended up coming down and hitting. Now we didn't come down and exactly hit the 1618, but we got pretty close to it. All right. This level is just slightly above this level, but you see the price action was drawn towards this level, and before it could fully hit, buyer stepped in and pushed this to the upside, right? But this little area right here, all right, ended up being some valid support and resistance levels where we ended up coming down to once we broke through this level. So how would you use this, right? Well, let's say you're coming up here and it didn't hold the 786, right? It doesn't hold the 786. It comes down and break below the one. Then, you can have this kind of like as a stop loss, right? Okay, well, I'm going to get out here because most likely we're going to come down to a lower price target where I can look to invest in the future. And I have 3 price targets to, start looking and seeing, all right, well, at these levels, which one do I want to try to enter in on, right? If I'm more risky, you'll go for the higher levels. And if you're less risky, you'll go for the lower levels. We can take a look at this next example right here. And this is just, really good price action. Okay, guys. So what we did was we took this swing high, connected it to our swing low. We have our breakout level above here. All right. And look at where we top out at, right at the 1.272 extension. Right now, we just went over, using it to the downside on this. So that's why this is here. But if you look, once we got above this level, we perfectly came up to the 1272 and then found resistance ultimately to fall back lower. And we can do that here. All right, and we can see the golden ratio right here working very well. We're connecting our swing low to the swing high. It's going to give you all the valid price targets to the downside. And then look at where we found support, right? We ended up bouncing here at the 1.618, very similarly to how we did previously on this 1618 in the past that I just showed you guys. All right. And we'll come over here and take a look at our next one. All right. And what we've done here is connected the same thing. Okay. We're connecting our lows to our highs, and it's going to give you valid price targets down to the bottom. And, we ended up coming here to the 1.272, hitting that very well. All right. And then ultimately bouncing back up. And, that's where we started to find some support. And then we did end up dropping all the way down to the 1.414. Right. And as you can see there, we bounced there and had a nice little move to the upside as well. So this is all the way back in December of 2021 that this Fibonacci is from. So, this could have been a nice sign for you once we broke through 0.11 on Casper to be like, okay, well, let me see if we come down to the golden ratio here, down closer to like 0.029, right? And, sure enough, we really did end up getting, we didn't hit that one very all the way to the 1.618, but we came down here to the 1.414, and that's where we found resistance was right here, or some support right here at 0.0547. And then, we come over here and we're doing the same thing. And, I'm just repeating basically the pattern here and showing you guys at how it plays out. So let's go ahead and look at this one. All right. And, once we got above our blue breakout level, we have our swing high to our swing low right here. And once we get above this level, look at where we end up hitting the 1.618. So, it's just really, really good stuff to have, available and be able to use. and ultimately just try to help you make some better informed decisions, right? I really like to use the one. All right. And once we get above the one or below the one, I like to call that my breakout level. So that's why the one is always blue for me. And I don't pay attention to the colors too much. I really just have the golden ratio on here. We're at the 0.618. All right, I have the 0.618 in yellow or gold, you could say. And then, the 1.618, I haven't really changed the color, but it's all about the blue. Like once you get above your 100% retracement, then you can, look for some price targets to the upside. And this is going to help you figure out where we possibly could go. And it does the same on the downside. Okay. Same on the downside as well. Once we break below this level here, it's going to give you some price targets right here and right here and right here that we could drop down to, and we end up finding support in between them and finding resistance in between them many times. All right, so hopefully you learned something new in this video, and if you made it to the end of this video, make sure to subscribe to the channel, smash the like button, and I do viewer requests every week. Okay, so this one actually was a viewer request. I made a couple Fibonacci videos before, but I just went ahead and made a new one for you guys. They wanted to see how Casper has been respecting the fibs, and if it respects the fibs, and clearly it does. We went over the key numbers to really be paying attention to, and the strategy that I like to use by having my the one level here in blue, and look for a breakout either to the upside or to the downside. Once you break through that one level, and you'll have some valid price targets that the price action is going to naturally be drawn to by these algorithms. Okay, so appreciate it, and I'm out.